We believe that Web 1 was the flat part of the curve, right? $2 trillion of wealth created by Cisco and Microsoft and Intel. And that was the smooth part of the curve. Remember, the wealth is the area above the curve. So you have the axis, the x-axis, and the y-axis, and you have this exponential growth curve. And Raoul's talked about this. You got this exponential curve. So the flat part was Web 1. The area under the curve, 2 trillion. Then you get to the knee of the curve, that's Web 2, 5 trillion. But now we're going to the parabolic part of the growth curve. I don't know, 15, 20 trillion. It's going to be a big number. And so you think about that growth process. Web 1 was all about read, get access to information. Web 2, read, write. Web 3, it's read, write, own. So in Web 1 and Web 2, that's $7 trillion.
Mark Yusko, the CEO of Morgan Creek Capital, offered an update on the crypto market and Bitcoin's trajectory. His insights shed light on the impending Bitcoin ETF approval by BlackRock, a move poised to channel massive capital into the crypto sphere. BTC, currently hovering around $42,100, anticipates substantial surges post-ETF approval. Yusko forecasts a bull run not seen in recent history, following BlackRock's entry with just 1% of its $30 trillion portfolio. This allocation could unlock a floodgate of hundreds of billions of institutional capital, potentially leading to a 400% surge in its value. So based on his prediction, he is targeting a staggering $150,000 within 6 months. He also emphasizes the synchronicity between Bitcoin halving event and this anticipated price surge, hinting at an imminent crypto upswing. In an interview with Liberty of Wealth, Yusko looked into the sheer magnitude of the global economy, emphasizing the opening of an approximate $30 trillion segment. He went further, highlighting the implications of BlackRock's potential ETF approval. Slated around January 8th, foreseeing an era-defining influx of institutional investments into the crypto domain.
All went to the application layer. Like right now, we're using TCP/IP, but Tim Berners-Lee and Vint Cerf did not get rich. Vint created TCP/IP. Tim Berners-Lee came along and wrote the first web page, created HTTP, and now we have the internet, but they didn't get rich. In Web 3, so far, about 80+% of the value has been captured by the protocols, Bitcoin, Ethereum, Solana, etc. And only about 20% has been captured by the businesses because we don't have very many applications. There aren't that many applications of substance that have been built. And the reason is we haven't even started the game. This is the fun part. Technology evolves in a 14-year cycle. It's been going on since 1954 when the mainframe was created. And 14 years later, you had the microchip in 1968. And then in 82, you had the personal computer up in Seattle where I grew up. Then in 1996, the internet. In 2010, the mobile net, where we all carry around supercomputers in our hand. And now 2024, which is only 30 days away, so happy December, 30 days from now, we will enter the beginning of the blockchain era, or the truth net, as I call it. So we went from the internet to the mobile net to the truth net. What's the truth net? It's where blockchains replace the current operating system of iOS and Android, and we disrupt financial services, the trust industry, with truth. Blockchains establish truth. And it's just starting in 2024. And we'll have this 4-year hyper bull market, lots of development, lots of companies. And then in 2028, we have a bust. Just like in 58, we had a bust with the mainframes. And then in 72, 73, we had a bust with microcomputers. And then in 96 to 2000 and 2000, or I'm sorry, 82 to 86 with the personal computer. And then 87, we had a crash. Then 96 to 2000, then we had a crash. Then 2010 to 2014, and we had a crash. So 24 to 28, and then we'll have a crash. But the cool part, the crash is where the magic happens and the good stuff starts. And that's where, if you remember back in 2001, all these internet businesses got crushed. Webvan, Pets.com, all this stuff. And Mark Andreessen famously said, all those ideas were right. They were just early. Now comes the fun part. And all the big wealth came from the companies that reformulated
Mm-hmm.
post the crash in 2000. And the same thing's going to happen. And the same thing happened around Facebook and Alibaba. Remember, Alibaba was almost out of business. Facebook, when it went public, it went down 50%, right? Google went down because people didn't understand the power of social media and localization. In a perfect world, yeah, you would time it perfectly and you'd step to the
Yeah.
sidelines. And the problem for us as venture capitalists is most of the things we invest in are illiquid. Now, what's likely to happen in 27, 28 is we'll get a whole bunch of IPOs. Like
Yeah.
all the companies that get built on top of the protocol stack will go public, and hopefully we'll be able to sell some into that. But we won't sell everything because all that bust is again, it's a setback in the
Bigger
beginning
picture.
of the
Yes.
S curve. So all innovation happens in an S curve. 10 years for the first 10%, another 10 years for the 80% in the middle, that upside of the S curve, and then 10 years for maturity. And that's the way it happens. But Tim Draper talks about this, that what you really have is an IS. So you get a hype cycle and a bust in that first 4 years as you get closer to the knee of the curve. And it's a false breakout. And then you get this bust, but it's from that bust where you begin the upslope of the S curve itself. 2030, not that long from now. And, look, do I think Bitcoin is a $5 trillion asset by then? Absolutely. Absolutely.
Mm-hmm.
Do I think the rest of crypto or digital, liquid protocols is another five? Yeah, sure. By then, most of the bad stuff will go to zero, like the Doges and the Shiba. Now, could then there be 15 trillion of Coinbase and Kraken and Binance and the infrastructure, but not the protocols? If she's saying the protocols can be 25 trillion, I say zero chance. But
Mm-hmm.
look, she's a smart lady. But look, her job, if you look at her track record, her job is to say things that are fantastical to get halfway or a third of the way,
Yeah.
right?
Yeah,
And
indeed.
that's not a bad strategy. Aim super high and hit high and
Mm-hmm.
and do great. And look, she's super smart. She's built a great business. I have admiration and respect for her, but I guess I would disagree on, liquid protocols being 25 trillion in 6 years. I don't see it. Bitcoin's different. There's a fixed supply, and some of that supply is lost or stolen, right? It's gone forever. Some of it's locked in multi-sig wallets and somebody passed away and that's gone. There's some of it that hodlers say, I'll never sell. Here's the thing. It's
Mm-hmm.
easy to say I'll never sell.
Mm-hmm.
Price is 100, not selling. It's 1,000, not selling. 10,000, not selling. 100,000. Talk to me. 1,000,000. Yeah, I'll sell a little bit. So there's a price for everything. There's no asset that people will never sell, right? There's a price. Bitcoin's the best performing asset 12 of the 15 years, including this year. And if you put it in a portfolio, it's perfect because it's uncorrelated with everything else.
Yeah.
It's 0.0 correlated to bonds, 0.15 correlated to stocks. And it's because stocks and bonds are correlated 30% because they derive their value from the same thing: economic growth, interest rates, GDP. That's not what Bitcoin derives its value from. It derives its value from millennials